Welcome back to Insibles, everyone. So I'm going to go over a recap with you guys on today's CPI and what we are anticipating leading into Fed hikes. Again, next Wednesday is our next Fed rate hike. Again, CPI is very much what's going to show us anticipation leading into next Wednesday's Fed rate hike. So today's CPI came out lower than our prior from 8.5 to 8.3, but higher than expected at 8.1. So we did have a major pullback in the market. Again, not exactly as low of a CPI as we were expecting after two 75-point basis hikes. And the reason why is because, again, that should have done at least somewhat of a move for us to continue on lower with CPI. So again, the market having a major gap down, now coming down very close to our previous support line that we had from our bounce here at 390. Our question is, are we going to hold our 388, 391 range? Are we looking for a bounce from here, or are we going to continue on lower as we are still anticipating next Wednesday's Fed rate hike? Will we continue on lower here? Are we going to drop into all-time lows here with this gap down and have an ultimate rug pull like we had previously on a major gap down? I'm going to go over exactly what our bullish and bearish scenario is here and what exactly I'll be doing if I was holding, if I was looking to enter at these levels, what exactly I'm looking for here. Again, either a bounce or that continuation on lower from here. Now, before I jump into this, if you guys can do me a huge favor, smash that like button, hit subscribe if you want to see more chart updates on potential breakouts or market updates that I mention every single day throughout the week. And if you guys are day traders or you are looking for very volatile breakouts that we mention every single day throughout the week, today was a nice breakout out the gate. I know it was a slower one, but it was just such a textbook breakout. It was just continuing on higher out the gate, and it was just a very simple play out the gate, as you guys can see here on the 5-minute chart with 𝐻YMC. We broke out from $1. We mentioned we were trying to break above $1, and as you guys can see, we did break above $1 here. Continued on into higher highs, and we broke out about 9% here up to 109. A very textbook breakout that we had in the Insibles room out the gate, and mentioned at about 108 that we were no longer alerting this. Again, very high risk, take profit, making sure that we did stay green, and sure enough, continue on lower from there. So again, a nice textbook breakout here with 𝐻YMC. So again, if you do want to see these major breakouts throughout the day, go to Insibles.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY to recap on CPI. CPI came out today at 8.3. We had a decrease in CPI from our prior CPI at 8.5. However, not as low as our expectations at 8.1. We did mention in yesterday's video again that we did need to hit 8.0 or below, and we did not hit that. And as you guys can see, we had a major gap down, a lot stronger than we may have expected, because again, we did have a major gap up on an anticipation. Again, mentioning this week that we were anticipating that possible major decrease in CPI. However, not exactly as low as we needed, and as you guys can see, now we are pulling back from that anticipation. So now the question is, after this gap down, are we going to continue on lower here? Are we going to hold our prior support here at our 388, 391 level, or are we going to continue on lower here? I'm going to go over exactly what we're looking for here. So again, as we have a gap down here, as you guys can see, again, our prior support here at 388, 391. What I would be looking for here is to see if we do get a possible pullback. I want to see if we can at least pull back one more time to make sure we are retesting if we're going to have that major gap down. Again, we could have a possible major gap down if we do continue on with this pressure down, for example. But however, if we do again have this pullback, in my opinion, we'll come out with some type of rejection candle to the downside at some point, and then possibly bounce back from here, and then possibly get that retest. And if we do get that engulfing candle from here, again on that retest, as in my opinion, if we did have our 20-day moving average moving over, again, this is the bearish scenario, then we could have that possible confirmation at this point, or we could chase again that continuation on lower. Again, from the perspective of playing at this point, after this gap down, I would be looking to see if we can get that increase in volume below 388 if I was playing to the downside at this point. Again, that is the bearish scenario. Again, even if we do have a pullback, in my opinion, waiting for that retest and then having at least some type of confirmation on that continuation on lower is what I'll be looking for here. Now, that bullish scenario, what we're looking for to bounce back. So again, as we do have this gap down, we are looking at our pressure here as well. As you guys can see, after that gap down, we do have our EMA lines that are crossing down here as we are below the median of our MACD. That is the ultimate bearish move that we would be looking for, other than crossing just below here. As you guys can see, that is the stronger pullback that we would have been looking for with pressure to the downside, as our 12 EMA is now pointing down rather than pointing up for that possible curl, with our 12 crossing back over our 26, as we would have been looking for. Again, if we did have our CPI come out below 8.0, then that's exactly what would have happened. However, now, as you guys can see, we are crossing lower, and we are wondering if we're going to continue on with this rejection or possibly cross higher. Again, this is a huge signal, because if you guys are looking for that strength to the upside, again, that bullish bullish scenario. Again, at this support level that we did have and we had this bounce from, we did have our ultimate sell pressure point that we did have here, and we are looking to see if we can hold below it and then get a decrease in sell pressure to the downside. Again, that decrease in sell pressure, if we do come in with sell pressure and then we do get that possible decrease in sell pressure with our white shaded lines coming in once again, and then looking for our EMA lines to possibly cross back up from there and then possibly get that bullish momentum that we're looking for. So again, that's exactly what we'd be looking for as far as a bullish move, making sure that we do get confirmation. Again, breaking above the median or MACD would be very key for that move. But again, if we do continue on with this increase in sell pressure, just staying patient, because again, after a major gap down from, again, our increase in sell pressure after multiple decreases in sell pressure, we are going to have a larger reaction, wait for some type of consolidation typically, and then we are going to be looking for that possible continuation on lower. Like I said, even if we do gap down, looking for that bearish move down if we did continue on lower. As you guys can see, we broke above the median of our RSI, but we did mention that we did also break above the median of our RSI previously, and we did continue on lower and then ultimately got our bullish divergence for that bounce that we had previously on one of the largest rallies that we had of the year. And as you guys can see, now we are getting a rejection once again, dropping below the median of our RSI here, now pointing down, looking to see if we are going to hold our lower lows here, as we have not been oversold yet. So in my opinion, if we were looking for that stronger move up, I would want to see if we can at least jump into oversold territory. If we are looking for that volatile play, at least to the upside, that's what I'll be looking for. If we are looking for that major move, of course, if you are playing more short term, then of course you could play between now and when we could be possibly oversold. So again, very much watching exactly how the market is going to digest CPI going into tomorrow is going to be very key, because again, either we do come lower, we do get a possible doji candle in my opinion, and we get a possible rejection on our 388, 391 level, and then we do bounce from there, or that doji candle continues on at the end of the day and then possibly does have a major move down. So again, that doji candle, again, the upper end and the lower end of our wick equal to one another, and then that would be, again, that possible morning star that could be created. That would be by Friday if it did get created on a bullish move. Again, that bullish move versus our bearish move earlier that we mentioned on that engulfing candle to the downside to confirm that we are continuing on lower. I would be looking for a morning star, again, getting our doji candle after a major pullback and then opening with a green momentum candle to the upside to get that morning star. That would be that bullish move that we'd be looking for to possibly continue on with the bounce here, and then ultimately that would be the inverted head and shoulder that we would be possibly looking for here on that confirmation if we did again continue on with that bounce and we did continue on higher. So again, that's ultimately what we're looking for overall. Now jumping back into our levels, if we are looking at exactly what level we are sitting at, if we do have a bounce and we do have a possible continuation on higher, possible green candle that comes out, then I would be making sure that we do not get an inverted hammer coming out shortly after that, coming in on Friday possibly on that digestion of CPI. Again, these are multiple scenarios that in my opinion could play out if they do continue on lower, or if we do possibly continue on higher. That is the inverted hammer that I would be careful for. Again, 2/3 of the wick being higher than 1/3 of the body that we do have here. So again, that inverted hammer is what I'd be careful for that rejection. Again, this is exactly what we're looking for here. Again, making sure we are staying focused on our candle structure, making sure we are watching our levels, watching our momentum is exactly what we go over every single day, and we will make sure we are patient leading into tomorrow as we are digesting CPI. Again, a very nice continuation on lower if you guys did play CPI to the downside today. Now, again, with that said, I know the market can be very choppy, for example, like we had here with CPI giving us a major gap down, but the largest breakout that we had today was a 200% breakout with an RBO, again, halted at $19.73, jumping up over $60 on the day, over 200% on the day. Again, go to instables.com in the description below, and only for $15 a month, you will never miss a breakout alert today again. And again, all of you instables that come over every single day and support the channel, again, a major gap down after not exactly the CPI that we did expect. Again, assuming that we were going to have a larger decrease in CPI, as we did have our continuation on higher here, and then now pulling back a lot of what we did assume. So we'll see exactly where we're headed from here. Again, our support level that we had previously at 388, 391, looking to see if we can hold this on the week leading into next Wednesday's Fed rate hike is exactly what we're going to be looking for. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.